The Dunham Quarter in Twos gives you a concise outline of what we view as the most notable economic events that occurred this quarter, involving domestic markets, international markets, and the bond market, all in about 2 minutes. Investors began the quarter with record inflation numbers and supply chain issues at the forefront of their minds. As the quarter continued, the unease unfortunately did not subside. Russia's invasion of Ukraine shocked global markets, leaving investors nervous about what is occurring overseas. The events of the quarter were like waves, crashing on the markets one after another. These waves eroded the markets, impacting both equity and bond indices. It was evident that domestic markets felt the storm-like effects of the quarter's events, with the S&P 500 ending the 3-month period down 4.6% and the MSCI ACWI down 5.36%. In the U.S., inflation remains high. U.S. wholesale prices for items such as grains, metals, and lumber increased. Inflation, coupled with the U.S. ban on oil imported from Russia, led to the price per barrel of oil reaching record levels. Overall, the first quarter of 2022 proved to be a wave of challenges, and the markets responded accordingly. There were few places to hide from the waves that crashed against the market this quarter. Diversification acted as a seawall, with U.S. value stocks lessening the eroding effects felt by U.S. growth stocks and international equity. Russia's invasion of Ukraine disrupted markets globally. European and Asian allies to Ukraine sanctioned Russian companies and oligarchs in efforts to deter Russia from continuing its invasion. Because the EU received a majority of their oil and gas imports from Russia, they were left turning to alternative sources for their energy. The resulting increase in oil prices globally negatively affected international equities. Back in the US, investors anticipated that the Fed would raise interest rates, leading in turn to a flattening of the yield curve. On March 16th, 2-year note yields contributed to the flattening yield curve when they rose just over 2%. These rising interest rates had a negative effect on corporate government bonds. As we continue into 2022, it will be imperative to monitor the waves of uncertainty, namely the war between Russia and Ukraine, inflation, and rising interest rates on the US economy, and how they may affect the market. Please subscribe to our channel to stay up to date on the latest Dunham insights.